In this video, I wanted to compare two really good companies and see which one is a better stock to buy for my portfolio. I'm looking at Comcast, which is a media and entertainment company, and their direct competitor in their same industry, same sector is Disney. Both of these companies, I'm sure you've heard of. Comcast just came out with Oppenheimer, a big hit movie. They have Universal Studio Parks. They have a huge studio. If you watch CNBC, that's a Comcast property. NBC, the Olympics will be on it. You'll definitely be on a Comcast signal. And they have a big broadband business, Xfinity, on the East Coast of the US. Disney, boy, you're probably familiar with Mickey Mouse, Star Wars, Pirates of the Caribbean, you name it. They've made so many good movies. They also have theme parks around the world. They have a streaming business in Disney Plus, and Comcast has Peacock. Disney is a very well-respected company. It's a brand that just about everybody knows about, everybody likes Mickey Mouse, and it's an interesting company. Now, it's one thing to like a company, it's another to see what it's worth and see if it's a good stock to buy. I'm going to take a look at the fundamentals of both Disney and Comcast, compare the two side by side. I'll share with you just a quick scorecard that I'm going to use, and then go through and analyze both of these companies to arrive at a decision. Which stock is better for me to buy for my portfolio? The scorecard that I'm going to use to compare these two companies is going to involve the key areas of a company that I look at before I make an investment. First, which business and brand is better? Second, which management team is doing a better job operating the company? You can have a great company, terrible management team, and the results are very bad. Which balance sheet is better, measured by debt to EBITDA, as well as other factors? Who has a better dividend and stock buyback program? The way value investors will make money is through appreciation, dividends, and stock buybacks. So I'm going to compare the two. And which stock offers the better discount of the two? That's going to be the criteria. Now, let's get into the fundamentals. Let me tell you about Disney. Disney is a traditional historic company. They started over 100 years ago. Their first business was the animation business with Mickey Mouse and other cartoons. Very popular, very successful. They started theme park businesses, this full studio, and they continued to acquire. They acquired studios and rights, like they acquired Star Wars, which was really valuable and a really wise move. They have also started a streaming service in Disney Plus and have other properties like ESPN is something that they own. So all those things are really positive. Some of the negatives about Disney is their management has been somewhat chaotic. Their CEO wanted to retire a few years ago, and he went into retirement. They replaced the CEO, and that CEO did not work out. And the stock price suffered. The company suffered. The company was somewhat confused. There wasn't really a really good strategy. They just had a lot of problems. So they brought back the previous CEO. Now, I think the previous CEO, which is now the current CEO, is great. Bob Iger, he's great. But he wanted to retire a few years ago. So now Disney's going to have to deal with, okay, he wants to retire, so who's going to replace him? So that's always going to be on the horizon for the Disney stockholder. Comcast also has a great history. They started as a studio and diversified over the years. They also have theme parks, and their business has been really consistent. They've no big news, no big controversy with their management team, which is an advantage with the Comcast company. They also have been paying a really steady dividend, which is good. They've grown. They have a Peacock streaming service, and they really have a good, solid business. As I'll show in the fundamentals, they're just a solid company, and I've liked the company for some years. Looking at the fundamentals for both companies, Comcast is a $156 billion company with revenue at $121 billion. So you're paying a little over, let's call it 1.5 times revenue for the company. Disney is a larger cap company, but it's a smaller revenue company. So you're paying more than 2 times revenue for Disney. So on that metric, I would have to give Comcast the check mark that you're getting a better sales to market cap ratio. Net income is also an advantage that Comcast has. Earnings per share is more favorable. They just generate more net income. And again, it's a smaller market cap company. The price to earnings forward is 9 on the Comcast side and 23 on the Disney side. So I have to give the check mark to Comcast there. Looking at the dividend is not even close. Comcast provides a better dividend, 3.15%, where Disney is under 1%. One area that I'll give Disney the check mark is that analysts really like Disney. It's really been on a rally, so they deserve a check mark above Comcast in one area versus Comcast getting the check mark in 4 other areas that I look at. It's important to have a solid balance sheet, and Comcast has a better balance sheet than Disney, and principally because their debt to EBITDA is well below 3, but on the Disney side, it's well above 4. I think that's troublesome. I think they have too much debt to EBITDA. I think problem with Disney is their profitability has really struggled, and that's really showing up in their ability to pay off debt. Comparing the income statement, principally, I like to look at revenue, which company's growing revenue better than the other. And if we compare Comcast, they've been doing okay. 21, they had good growth, 22, okay growth, and then no growth in 23, which is concerning. But Disney, on the other hand, they've been growing really well. So I have to give the check mark to Disney. They've been growing their revenue better. Cash flow is a different story. Comcast generates much more cash flow from operations and nets out to have way more free cash flow for the company. Again, it's a lower market cap company generating far more free cash. So the check mark goes to Comcast for free cash flow. Analysts like both companies. There's a long list of analysts that like Comcast, have a high price target for the stock. So they're thinking that the stock is undervalued and should rally. And Disney has a lot of analysts liking the stock, especially since it's been in rally mode. So really, it's inconclusive in this area. I think they're both liked by analysts. So I'm going to give them a tie. Earnings per share for both companies look good. Comcast has positive earnings. Disney, so does Disney. So it's inconclusive. They're both companies are doing well from an earnings per share perspective. They're both expected to grow their earnings. Disney's really getting their business back together. Comcast always had it together. So from an earnings per share perspective, it's inconclusive. It's a tie. They're both doing well. On the dividend front, it's very different. Comcast has a solid 3.15% dividend. They have a buyback yield of 6.9%. Really good. Dividend, not so good for Disney. The dividend is less than 1% for Disney, and their buyback yield is negative. So the nod clearly goes to Comcast on the dividend front. They're just a better dividend payer. They've been consistent. They've been growing their dividend. All the things you want to see in a good dividend payer. I completed a complete valuation of Comcast and Disney using the free cash flows I expect each company to produce, as well as their earnings per share. After I valued the companies, I came up with the results that Comcast is discounted by 14%. And the difference being the free cash flows. They generate free cash flows that give the company a value above its current stock price. On the other hand, Disney, very weak free cash flows. Their earnings per share is okay, but the weak free cash flows is a big deal to me. I value companies, and most of my value is based on those free cash flows. That's what other value investors do, like Warren Buffett. And I believe that Disney right now is being sold at a premium of 67%. So needless to say, the check mark goes to Comcast in the category of discount. So which stock is better for me to buy for my income portfolio? Well, let's take a look at the grades on each category that I was going to measure and see who gets the check mark overall and which stock ought to be the stock that I buy. The first category is which business and brand is better. And I believe Disney, that brand is just one of the best brands in the world. So I'm going to give it to Disney. From operating the business and who's performing better, Comcast has been really a consistent performer. There's a new CEO on the horizon for Disney, so I cannot give them a nod for well operated. Comcast is a very well operated company. On the balance sheet side, Comcast has a better balance sheet. Their debt is less than 3 times EBITDA. Comcast has a better dividend, better buyback program, and they offer a 14% discount where Disney, I believe, is priced at a premium. So it's a clear winner. Comcast is the stock that I should be buying going forward in this category, and I'll be making plans to buy Comcast on dips. Any business that I invest in, I look at their peers, their competition to see which company is the best one in that industry. And here are two companies very similar, Comcast and Disney, that have businesses that resemble each other. And it was really interesting to compare the two fundamentally from a valuation perspective, and then make a decision on which stock is going to be better for me. I hope you found this video interesting, and I really appreciate you watching.